Good morning. It's Tuesday, January 9th, about 6 a.m. Central Time. Overnight, the precious metals are higher after yesterday's mixed session. You have February gold up $8 at 20.41. March silver up 3 cents, 23.34. March copper down 1 at 3.79, and April platinum down 4 at 9.54. So some observations and a couple things that I wanted to say in yesterday's video that I left out is that the buyers in the precious metals, they've really been sidelined. And the reason is, if you look at managed money and also speculators in the futures markets, they're at one of the highest levels on the long side in several years. There are about 5,000 contracts off a record high holdings on these gold futures. So are there any buyers left is the question. Now, if you look at the ETF side, it paints a very different picture. Most of the ETFs have been liquidated. Those participants are looking at other areas to participate in, say cryptocurrencies, say chasing US equities, trying to catch the falling knife as prices have gone a little too far, too fast to the downside on US equities, and that's where we saw that snapback. So if those participants can come back into the ETF world on gold, silver, and etc., you should see prices be able to have more of a cement concrete floor and break out to the upside. The critical level of support on the gold market, about 2029. We start entering into a pocket value zone from 2029 down to about 2015-80. The key level of support, the line in the sand, call it 2000 right now. I think many of the people that caught that move from about the 1950 up to those contract highs, those all-time highs, and then it cycled back and forth here. I believe that's where they're going to have their logical stop placement. Now, if you look at some of the other things that we're watching here and some other determinants of what's going to happen in this market, really the question is, how soon before the Fed begins to ease? That'll affect the dollar index. That'll affect treasury yields. We saw Fed Speaker Raphael Bostic come out. He addressed inflation. And he said that it actually fell more than what he expected, and that's what kind of gave that little updraft here in the precious metals in yesterday's session. Looking at some other outside markets, crude oil futures up about $1.50 here. So Saudi Arabia yesterday came out and said that, hey, the demand picture is not as great in 2024 as what we were initially anticipating. I think they could be wrong on it. I think if we avoid the recession, which it surely looks like we have based on economic data, based on the labor participants, based on wage growth and everything else, it looks like we'll have more of a soft landing. You get the soft landing, it kind of puts a floor on the level of demand out there. And if you look at U.S. growth, which I think has really impacted crude oil futures to the downside as far as production levels, they've kind of stalled out. I don't anticipate that this administration continue to allow big oil companies produce more, expand wells, things like that. Their initiative is to the green energy, and they've gotten prices down to comfortable levels where they see inflation has come off. U.S. equities here yesterday, big snapback in the NASDAQ and the Russell and the S&P, and even the Dow erased some of those triple-digit losses. So the thing about the equity markets right now, what I'm kind of looking at is that maybe perhaps we're going to bounce to a lower high. So tactically, someone, if they were creative, they could look at perhaps playing the downside with an easy line in the sand where the recent high was in the last week of December. So other outside markets, again, oil up about 2.5%. Sugar futures starting to turn up. Had a lot of calls about sugar breaking out to the upside. A lot of people also playing cocoa to the downside. The grains are near, if you look at corn on a weekly chart, near those contract lows. 447 is going to be that low. We got in the range here yesterday on that contract, and again the palladium market dropping back below 1,000. So we're going to want to look at a longer term chart on that, see if there's an opportunity, but it is a larger contract with a lot of volatility, so you want to keep an eye on that. So as far as economic data coming out today, trade balance data, not really that big of a mover and shaker. Some small business optimism report came out. That's not really anything as well. And Vice Chair President of Supervision Barr speaks, but it's really on banking regulation. So nothing really there. Get on the silver market. Seems like below 23, a little too cheap. They've been defending that level pretty good. They kind of like it between 23, 23.50. Who that is that likes it that I'm addressing, I'm not sure. Could be some big bank, could be some guys working some trade desks. So, you got any questions, give me a call. I'd love to talk to you here, 312-858-7303. Remember, futures and option trading does involve risk loss, may not be suitable to all investors. Good luck and good trading.